important to understand that we have CPI coming up the next day. And although I can understand this fully, because in my experience, when I started trading and when I started seeing sort of, or when I got aware, people told me the importance of news, and I saw the importance of news, etc., in the market. And at first, you don't really believe it because it's not something you can really see. You need to experience that loss right there on your US dollar. You need to experience sort of the break-even trade or the loss right there before you start believing, okay, news is a huge factor actually. And with news, it's just very simply said, price will look clean, price will seem clean right there, but it's just not. It's just not clean. And it will just not follow through. It might consolidate, might do some weird stuff. So it's extremely important to understand. All right, let me see. Is I believe the music is off, right? the beautiful Discord music. All right, now let me go over a few pairs right here. And ooh, there it is. Oh, this is a really volatile CPI actually. A really volatile CPI. I haven't seen this much volatility in quite some time actually. That is really volatile. Wow, wow, wow. Let's see. And in an ideal world, of course, this right here is currently the fake move to then continue lower. But if it is the real move right there to continue higher, then ideally again, closing above highs, that is going to be crucial. And once we close above highs right there, then we can look at the fair value gaps, then retrace, then continue higher off of that. Initially, in the first few seconds, the first few minutes, it's always too early to tell if this is the fake move, if it is a real move. So keep that in mind as well, that just because we have one spike does not necessarily mean that this is the real move right there. This can just simply be a fake move to then continue higher or lower as well. Let's see. Let's see what we want to do. And ideally, when we do have NFP coming up, then ideally what we want to look at is any pair that might have a fair value gap that is already sitting there, that is already ready to go off of, higher off of, lower off of, then we can just simply look at a normal trade ID as well. So I was mainly looking at this, for example, is quite interesting right there. If you already have a fair value gap right there, just a normal ID, the only thing is that time then speeds it up. And that's exactly what we want to see as well. So on the dollar right here, let's see what we want to do above those highs right there, if we can reach them as well. And for ES right here and NASDAQ, I mentioned yesterday in the forecast that ES could be very interesting during the forecast right there. But the fair value area and the fair value gap overall has already been reached. And it seems like we are creating a sharp turn. Like we mentioned as well, it was quite an aggressive sharp turn we got yesterday right there. So overall, this is not really something where I now want to go into the lower time frame to sort of catch the bottom right there. No, I just want to wait right here. So let's see what we want to do as well. More of a spectating session as well with news right here. All right, we have reached those highs, and now it will be interesting to see if that is a sweep or a run on liquidity. Again, how we determine that is the basics of those fair value gaps, where if we close above it with a fair value gap, ideally of course on the time frames, on the higher time frames right there, the higher time frame the better. Initially it will be with 5 minutes fair value gaps, 15 minutes fair value gaps. Once we close above it, have 15 minutes fair value gaps perfectly overlapping with those highs. It's exactly what we want to see. Just lost the house gambling CPI. Exactly. It went to my take profit and then to my SL. It's definitely something you do not want to trade, CPI. If you have a trade open and it is not a swing trade, so it's not a 4-hour or above entry, then I would not be in that trade. That's more so gambling than trading, if anything. Let me see. I should treat the big three like the word but. Everything that comes before it is bullshit. Yeah, exactly. Exactly. Well, it's a dangerous game, right? It's a dangerous game, and I think I can keep repeating myself, but I think we can all understand that by now. It looks more like a sharp dump as the sharp turn. Exactly, exactly. Oh yeah, yeah. Spare garden. Nice, nice, nice. All right, let's see. Let's see what we want to do above that high. That will be very interesting and will tell us a lot as well about the rest of the week. Let's see. Nothing yet. It's too early to tell. It's way too early to tell right there. So let me go over some other pairs as well. See if we have something interesting. On the longs, New Zealand dollar CSF, we talked about this right here, where the entry becomes quite difficult. So this is not something I would want to get involved in again right there. I just want to wait. It's sort of missing the move overall. That's it. And GBP JPY, let's see. GBP JPY moved higher eventually. All right, quite interesting. A nice close above. A nice close above those highs as well. So on the 1 hour, it's a very nice fair value area currently with the fair value gap sitting there as well. So let me actually go into the lower time frame right there to see what we are doing. That's quite interesting actually. Let's see. Let us see, let us see. On the 5 minute, what are we doing? Ah, it's a huge wick. Huge wick. Let me see. On the 1 minute, I imagine quite similar. Could be quite interesting if you get a re, but with that much volatility coming into the market, it again makes the stop loss placement a lot more difficult. And that's what we need to understand as well. Because then the RR usually is just not really worth it. All right. Let me see. Thoughts on GBP Canadian dollar 4 hour re are. Let me see. GBP Canadian dollar. GBP Canadian dollar. Sweep the highs right there. Well, this one. Okay, yeah. I'm not sure, and the reason I'm not sure is because we are respecting those preliminaries right there. I do think it can still continue higher, but if we are coming in with that much momentum, continuing lower right there, that's not something I would want to be a part of initially. Maybe later on, if we get the right confirmation already to continue higher off of that, that could be quite interesting right there. But in the meantime, I would want to wait a little bit, especially after such a weird retracement to then continue higher right there. It's not too nice. Not too nice, if that makes sense. So here, the plan to action could be, if we come into that 4 hour value gap, to wait for 1 hour value gaps, maybe extra 15-minute value gaps, maybe 15-minute ST plus re, instead of a 5-minute ST plus re, to then continue higher off of that right there. Just wanting gold to get out of the range, be trading S&D conditions for the past 2 weeks. Yeah, that's a pain in the ass, to be honest, because especially if you're a flow trader, then you're more so reliant on whatever that instrument is doing, of course. So here, I hope, my friend, that gold finally will do something. Right there. Yeah, it's just been consolidating overall. Very difficult conditions right there. Very difficult. But it could be nice if we actually want to continue low right here. Eventually, it could be nice. I feel like even trading across in the same session before Big 3 news event is a bad idea in general. Yeah, I think the way to approach that is, again, the day before and maybe the London session before it's all right. It's not too great, but it's all right. It's better than trading the US dollar in general. But if we are looking at the exact minutes before and, for example, an hour before, then still they will be affected. So if you're about to take a 5-minute entry on Australian dollar CHF, for example, or you're about to take a 1-minute entry, then my advice would still be wait a little bit more until you have the CPI release. And it's the same for cross the CPI, where you have GBP CPI, for example. Still wait a little bit. Yes, you can execute before and after it, but in general, it's still going to be volatile. And really depends on the overall entry you have. If it's a 1 hour entry and above, that's perfectly fine. It's perfectly fine. Almost had the perfect third candle for 4 hour for value gap on GBP Australian dollar, but now it's also pumping. Yeah. Big three right there is always out to break some hearts and break some forecasts. Let's see, yeah, that is a bit of a shame. Would have been very nice actually right there. Would have been very nice. Let me see. Australian dollar CHF also just continuing higher right here. Nice for our order flow. We have reached swing highs as well, those targets. So it gets a little bit more tricky as well. Canadian dollar CHF, let's see. Comfortable close above those highs. So you can confidently say as well, the next target is the next premium rate, which currently is that swing high on the weekly right there. So that could be very nice eventually to look to follow through on the daily vergap as well. CHF JPY. All right, not following through off of that daily vergap higher right there. And again, we mentioned that overall, the higher time frame here can be better. If we're being extremely picky, then the higher time frame is just not that interesting right there. Overall, because of the consolidation as well that we're seeing right there. I'm trying to get my mama house in 2 years. Gold need to stop playing. Well, yes, that would be lovely, man. That's a great goal. I love that. Let me see. On the dollar. Okay. Okay. Still not too crazy of a run on liquidity. Also not too crazy of a sweep of liquidity. Still in between, in my opinion, right there. We'd have to wait a few more candles right here to see what it actually wants to do. And if we get that fair value gap again overlapping with those highs, that could be very interesting to then continue higher as well on the dollar, which means that eventually we might be looking at shorts as well on EU, AU, GU, etc. Look at the indices really quick. All right, for the rest, it's just a lot of waiting, for a lot of pairs right there. All right. Depending on how you want to go about that, scalping 30-second and 1 minute chart, really depends on how you want to go about that. If you want to use a flow train plan, yes, that can definitely be possible, 100%. And it's actually how I approach futures as well. Is this how CPI normally is till March from your experience? You're just not really moving up or down, just pumping and dumping within the range. Well, it has been as of lately, to be honest. It has definitely been. But from my experience, to be honest, don't really remember the March last year. But so far, the price action has been more difficult, yes. More difficult as in just more rangy. We have not really gotten a clear range just yet on a lot of pairs, a lot of instruments. It's been a lot of consolidation, a lot of ranges. Even GU right here has been consolidating a lot. The only real movement that has been happening has been this month. And even the last week right there and the beginning of this week has just been consolidating. So of course, that makes it a little bit more difficult overall. But again, those times will be over as well. Eventually, we'll get better price action. The odd daily, let me see, Phil. Let me see. Yeah, that could be interesting. That could overall be interesting. Let's see what we want to do right there. Let's see. Curious to see your perspective on New Zealand dollar JPY. I'm skeptical of it after sweeping monthly PD ray. Let me see. New Zealand dollar JPY. I'm getting a little bit ill. Not too nice. Right here. All right. We have the monthly swing high indeed that we might be sweeping. And in the forecast right here, and the only reason why I personally do not like it is because we are coming into that daily value with a lot of momentum, meaning that we are currently respecting this premium array. And whenever that happens, and this is something we touched on in the previous session a lot, and I want to go over more examples as well in this session. And the example right here is absolutely perfect because when we do not have a perfect fair value gap overlapping right there with the highs, we can assume that there's some kind of respect for the swing high, for the high we just took. And when that happens, for example, you have a great example on NASDAQ actually. Let me quickly show you right here. Where was it? Where was it? Where was it? Because when that happens, that is not ideal. And the reason that is not ideal, it was right here, right here. Here you also have the same situation. We run the highs, as in we come above the highs right there. We take out the swing high. Then we have a fair value gap right there that is not exactly overlapping with the highest point of that high right there. That indicates to me that we have some sign of respect of a premium array, meaning that the fair value gap right there, the discount array, has some momentum, bearish momentum going into it. So either the retracement is going to be deeper to then continue higher, or we might retrace a little bit deeper right there to then continue higher, or that does not happen at all and we target the opposing liquidity, and this is a sweep on liquidity right there. So for New Zealand dollar JPY, that's a very similar situation on the daily right there, what we are seeing. And when we do see this right there on the daily, then all this momentum needs to be sort of, or when we go into the 50-minute of that daily fair value gap right there, then all of that momentum needs to sort of stop perfectly at the 15-minute to then have our perfect ST plus re. That's quite unrealistic to then let the 50-minute carry all the weight right there. So in here, it is waiting for a little bit more confirmation as well, and keeping in mind that we might have a bigger retracement first. So that's very important. And that's also why I personally did not want to enter off of the daily fair value gap right there. I have not understand your mentor is good for scalping. My friend, I'm sorry to be, I don't want to be rude, but if that is a question you ask after coming into the mentorship, then you have the wrong preparation coming into the mentorship in the first place, my friend. And again, I don't want to be rude, but yes, this is also good for scalping. But I feel like the information coming into the mentorship is more important than asking after paying and getting into the mentorship. Anyway, let's move on right here. And again, I don't want to be rude or anything, but I don't know. That's just not the right question right here to ask, in my opinion. But let me see. So we probably aren't going to see some amazing trades until either the interest rate drop from this 5.5, 5.25 range, or the new president to be elected, or both. That's, yeah, most likely, yeah. That's a good point. That's a good point. Let me see. Can you take a look at GBP/JPY 4-hour overlapping with highs? Yes, for sure. For sure. This was again, in hindsight, currently a beautiful move right there. Eventually, we also had the extra confirmation going higher of the 1-hour fair value gap. So that was quite nice, indicating that we do have a discount rate holding right there. It's quite nice price action. Now, we already had a beautiful 1-hour fair value gap as well overlapping. This is exactly what you would want to see. And a situation like this is the opposite of New Zealand dollar JPY, for example. Where right here, once you have the highs and you have the fair value area and you have the fair value gap right there, the fair value gap perfectly overlapping with the highs. That's exactly what I would want to see when we do have a run on liquidity. So then we can go into the 1 hour immediately right there, where we have an ST again, because of CPI right there, the entry becomes a little bit more difficult overall. Eventually we have an entry sitting literally just now right there, which you can continue higher off of. Only thing is that I do not really like the 1 to 2 overall right there, because the stop loss placement becomes a bit more difficult as well. That's very important. But eventually on the 4 hour, I think you mentioned, and the 4 hour right here, if the candle closes currently like this, I would not expect a retracement. And again, that's for me then a variation breakaway gap where we might already continue higher. So a retracement right now, since we are already expanding on the 1 hour, this retracement would be more suspicious to me. Would not really like that, in my opinion. Then I would almost expect lower prices, if that makes sense. And no worries, also, no worries at all, no worries. But yeah, for sure, it can be used for scalping, my friend, for sure. If you go through all the content, because I can see you have the green leaf, so you're quite new. If you go through all the content, then you'll arrive at it for sure, my friend. Keep us updated, and if you do have any questions, then of course feel free to let us know. No worries, Phil. Thank you. Let me see. Order flow, candle signs, everything's fractal. You're not limited to one style trading. Yes, 100%. Can pretty much use this concept for everything. Time frame is what depicts your scalp. Yeah, exactly. The only thing that changes if you want to trade differently is time frames. It's the only thing that changes. Other than that, it's completely up to your choice. Wrong. I tried applying these concepts to poker. They didn't work. Let me see. When price breaks out of fair value area, but order flow still hasn't shifted, can you still look to trade that as a filtering process trader, such as we're seeing on New Zealand dollar CHF daily right now? Or would you wait for daily order flow? Let me see, my friend. All right. Let me start from the top right here. Weekly fair value gap right there that we're coming into. Monthly, something interesting? Not really. Well, monthly, it is quite interesting to see how comfortable we are. And this tells us a lot, right? How comfortable we are above a previous month's high. And we don't even need to close for that. We don't even need to close on a monthly right there to tell us that. And that's exactly what we would want to see. So here on the weekly, potentially creating a weekly value gap as well, which is quite interesting. On the daily, we have the daily value gap right there. And let me see, what do you mean with the price breaks out of a fair value area, but the order flow still hasn't shifted? Okay. So if we currently, because we don't really have order flow confirmed just yet, is what you mean. So in that sense, yes, we can still look to trade this. And the reason, because we have daily order flow aligned, etc. And we're coming off that previous month's low as well. Or not daily order flow, but we are moving higher on daily, and we already have daily fair value supporting the ID, if that makes sense. So the fair value area actually here on the lower time frame is this daily order block right there. If we zoom in, that becomes the daily, or sorry, the 4-hour fair value area to continue higher off of, overlapping with the daily fair value gap, if that makes sense. But eventually we can also look to continue higher off of. So you see, this could be a sweep right there, which could be interesting to continue higher. Overall, again, the same thing applies where stop loss placement just becomes quite difficult. Let me see. I took some loss on GBP Canadian dollar yesterday. It was some very good before a huge reversal and stopped me out. 5-minute ST plus re of 4-hour value gap. I know you have given some insights about this in yesterday's forecast, but still felt like a good setup. GBP Canadian dollar 2:50 a.m. timestamp. I agree that it consolidates in 5 minutes during Asia, but then gives an entry opportunity in 5 minutes after sweeping the Asia lows. Let me see, GBP Canadian dollar. And to be honest with you, it was not a bad setup in my opinion. If you actually took it where I think you took it as well, let me see. On the 4-hour, we go over the full situation again. On the 5 minutes, right there, 2:15. Yeah, that's not a bad setup in my opinion. It's if we are being picky, then you'll see a recurring thing happen. And I'm not sure which else one. There was another one. There was a pair last week. I went over it in the forecast, maybe also the breakdown, where we have a similar situation. Usually when we create these weird retracements, when we've already had the ST right there, and then we try to push higher again, that creates a very odd price action where it doesn't really want to continue higher anymore. Otherwise, it would have already done it right there. So even though there's Asia, it should have already continued higher right there. So that is the only thing if I'm being very picky about it. But other than that, I do not think this is necessarily a bad trade. And I remember you sending, I believe, you got taken out before the spike higher right there. It's just unfortunate, to be honest. And again, I don't necessarily think it is a really bad trade. I think it's a loss that we can definitely accept. 100%. Good morning, mate. Silly question. After we take the context high / low, do you personally wait for minimum 4-hour VWAP confirmed in order to enter in a trade. Comfortable, or you have a different mechanical rule. If you've explained this before, I am sorry. No worries at all. Don't say sorry for that. No need to say sorry at all. No need to say sorry. And there's no silly questions. No worries. So there's a rule that we go over, I believe, foundation enrollment or advanced enrollment. And when we have context high / low taken, usually you go down one time frame to find new context. So what that looks like is, for example, let me show you NASDAQ right here. Let's see. On the daily and on the weekly, actually, on the weekly right here, eventually we take context. And as a general rule of thumb, you would go down one time frame to find new context. But that general rule of thumb is extremely general because it really depends on the overall situation that we are dealing with. Where an easier rule is you just go down time frames until you find new context. So what that means is, do we have daily context right here at that moment in time? Well, yes, but only after Thursday right there once we create that daily VWAP. So that might be too late already. Then we can go down one time frame again. Do we have 4-hour context? Yes, we have right there. So then it would be 4-hour context right there with the fair value area, because whenever we take context, usually it creates a fair value area as well. And that is exactly what we can continue higher off of right there. Then the next thing is, and I do want to go into the 1 hour because this is quite an important aspect. Because before we had the 4-hour context, we actually already had 1 hour context. The exact same thing, but then on the 1 hour. And we need to take into account as well the longer it takes to continue higher off this 1 hour right there. Of course, we will create new VWAP. So that is exactly when we also create a 4-hour VWAP, which eventually we already expand higher off of. So that is quite important to understand. So to answer your question, I hope it makes sense, by the way, do let me know. Then you would, once you take context, you would go time frames, down time frames until you find new context. But it's important to understand, of course, that if you have weekly context and now you have 5-minute context all of a sudden, then we are about to create 50-minute and about to create 1 hour context as well and about to create 4-hour context. The same thing on the dollar right there. That's why it's quite difficult right here. Once we take out those highs, which currently is definitely seems like we're running that liquidity, then eventually we can commonly say, well, we are running it on the 5-minute, but on the 50-minute, we are also creating new fair value gaps right there. And on the 1 hour right there to have overlapping fair value gaps with those highs to continue higher off of that. If that makes sense. Hopefully that makes sense. All right, did you identify any setups today? I couldn't find anything nice, but we're good to hear if you found anything. No, to be honest, not really. Not really. And I was more so relying on NFP to hope, or not NFP, CPI, sorry, to hopefully get something nice. But there's pros and cons to the big three setups, where if there's no clear retracement into premium or discount rate to then continue higher, so there's no fake move for CPI, then it becomes very difficult to get involved. So it's also very easy to know if you are going to do something for that day, because I can confidently say that I'm not going to trade this day. And the reason for that is because now everything is just expanding. So when everything is just moving away, then I do not want to chase price, and it also becomes extremely difficult because your stop loss placement is going to be hard, etc. Things like that. Let's see. Watch Fun the Guide first for maximum results in poker. Hi, in your opinion, how could we have gotten involved in GBP JPY? I've seen a nice high time for price action on the daily and 4-hour wicks and rejection into fair values, but I couldn't see a way how I would have gotten involved on the lower time frame. That's a great question. That's an absolute great question. And it really depends as well on the type of trader you want to be. And this is always the first thing we need to go over whenever I do answer a question, because if you're a flow trader, then it becomes almost a question from me to you, where I would ask you, why didn't you get involved in the first place? And if you're a filtering process trader, then I can fully understand on why you wouldn't get involved. And I imagine, since you're trading GBP JPY, that you are a filtering process trader. So then I can, well, I do not believe someone has GBP JPY as their alone pair, but yeah, filtering process trader. All right, perfect. So Ah, is my pointer not visible? Wait, give me 1 second, really quick. Let me see. Should be visible again. Should be visible again. Hopefully, hopefully. You see really quick? Cool. All right, perfect, perfect. Thank you for letting me know. Thank you. So how you would want to get involved, it then becomes more of a hybrid plan. And what I mean by that is here, for example, we had the 4-hour Verwagap high right there, and I did not necessarily like this initially. As in, of course, we are likely going to continue higher right there, but I wanted some more confirmation I mentioned on the forecast. So the more confirmation can come off the 1 hour right there, waiting for this right here to get involved. And if there is no real entry right there of that 1 hour Verwagap, then for me, there was also not a great entry, because the entries that we had right here at the beginning, these are all possible entries, but these entries right here, you would likely take a lot of hits before you get the right move right there. So yes, in hindsight, this is a great move. But how many ST plus Rees did we already have right there that did not hold? So we might have, well, actually, did we get an ST plus Re did not hold? Let me see. Well, arguably one right there. But you might have taken a few hits right there before you got involved. Then the nicest entry is right there in hindsight, which is, of course, very easy to tell you. But after that, I believe this is the next best setup and the most realistic one as well, right there. Because that is where eventually we get the 1 hour fair value gap. We trace into that before London. Actually, we get a 5-minute ST. Do we also have a 1-minute ST plus re right there? Let's see. Yes, we do eventually right there as well, where we eventually continue higher off that. So, and then again, it becomes a little bit of a question on what type of trading plan. Because if you're solely a filtering process trading plan and not hybrid, where you can switch between flow and a filtering process trading plan, then this is not really a move you would be catching, in my opinion. And you would more so looking at maybe 15-minute fair value gaps higher right there. But again, then you would have likely taken some hits before you even got the winner right there. So really depends on what type of trader you want to be. Let me know if that makes sense. No fair gap is fold. Exactly, my friend. Exactly. Let me see. On the dollar, is the monthly BPR no longer the target? Is the next theoretical target would be the high, is it right? Only looking from the monthly standpoint. Oh yeah, perfect, Tulan. No worries. I like that. For sure. Let me see. So the next target right here, this is, the BPR for me is never really the target right there. Then purely on a monthly basis, what target would be is these highs right there afterwards. I would be more comfortable in finding a lower target right here. For example, the order block that we have right there. And the reason for that is because then we have more of an idea, more clarity of where it can actually reject a little bit as well, if that makes sense. So the next target, this order block, which we currently reached by the look of it. Yes, we did. And then monthly, purely in monthly, which was your question. So excuse me for ignoring your question, is the monthly swing high. Yes, for sure. Cursor is visible. All right, should be good. Good, perfect. Is tomorrow tradable for US dollar pairs? Yes, for sure. 100%. I would. I take these kind of losses all the time. Yeah, frustrating, but all the similar loss I took when to take profit before stopping me out. 6% of my losses are like this so far. That's very interesting. Is that for your data? Does that happen more on crosses or on the majors? I feel like that's really a crosses thing, but I could be wrong. I feel like it happens quite a lot of crosses. Crosses, yeah. Crosses. Yeah, it's definitely very interesting. Definitely something to take into account, because of course, if that happens too often, then yeah, referring to the loss of GPU Canadian dollar. Yeah, exactly. The weird wick before it to stop loss before it then continues higher. Let me see. GU seems to form 15-minute period to continue. Let me see actually. 15 minutes right there. Yeah, this is just gone in a sense. That makes it quite difficult. Again, If the dollar has a huge rejection right here of the weekly order block, then yes, can it still continue lower? For sure, most definitely. But it becomes more and more unlikely right here, where GU is still quite strong overall. And if GU gets nice 4 hour value gaps, 4 hour value gaps lower as well, then right here, this could eventually be very nice to get some context to target the monthly value gap right there that we still didn't trade into eventually right there. But 15-minute, yeah, question was already answered. All right. Perfect. Regarding your comment on GBP Canadian dollar, the 15-minute in fair value in Asia, if that really continued higher, then we would not be able to involve since it was outside of 10 a.m. Yes, exactly. That's yeah, it's a weird correlation, right? Because it's something we have to take into account, but it's also something we have to say, well, we are likely going to miss the move right there. So yes, correct. Yes. Let me see. On the monthly, we are hitting a fair value low. How you can be so sure we will close above the high? I'm not sure what you're referring to, my friend. On the dollar? On the monthly, we are hitting a fair value low. How can you be so sure we will close above the high? Above which high? Did I mention anything above close above a high? Above this high? I'm not too sure. If a fair value gap is present on forex.com charts that you use in TradingView but not on Think Markets Broker in MT5, for example, you would still count it as a valid fair value gap and look for boundary incorrect. I trust you mentioned this in one of the forecasts. Yeah, for sure. And for me, I don't really look at the broker on MT5 or MT4 for the chart. So whatever happens there is irrelevant to me. I only look at TradingView right there to see what we actually want to do, if that makes sense. To avoid any confusion, if that makes sense. CPI and US dollar, is it okay to trade crosses during this day? For sure. It is. And again, it really depends on overall what your entry is, where you are looking to trade. If you are about to take a 1 minute entry ahead of 1 minute ahead of CPI news release, then yes, there's still going to be extra volatility. Will it blow your account and slip you like crazy, like on US dollar pairs? A little bit less, but you will still feel the damage. So it really depends overall on the situation. But in general, yes, it is fine to trade, 100%. CL 15-minute manipulation very fast. Do you think the bullish trend will resume? Let me see. I didn't even look at crude oil just yet. This could be very interesting, actually. Let me see. All right. We do not have fair value overlapping with the highs, which we just mentioned. Once the context is taken, that's ideally what I want to see. We do have quite interesting price action. And when this situation like this happens right here, this is very interesting to me. Because here we have highs right there, and we not only have highs, we also have an order block. So that is a nested order block right there, overlapping with the highs, with the fair value area, and a fair value gap. So that makes 3 discount rays right there. That's quite strong, which we can continue higher off of. On the 15-minute right here, I do think this can definitely look to continue higher right here, in my opinion. In my opinion, this can definitely currently look to continue higher, targeting the highs that we have right there. It's perfect equal highs, actually. Interesting. It's very interesting to take a look at as well. All right, what do you think of Australian dollar, New Zealand dollar with bearish 4 hour unusual context if the bullish 4 hour fair value gets overtaken? Let me see. Australian dollar, New Zealand dollar. Let me start from the top again. Monthly right there. Only thing, yeah, the target has been taken. So I imagine that's why unusual context going higher could be quite interesting. We are currently coming into the 4 hour fair value gap right there. Daily fair value gap right there with overlapping lows as well, the fair value area. That's a huge resistance area right there. On the 4 hour right here, if we can continue lower right here, that could definitely be quite interesting right here. And I would want to wait for 4 hour fair value gaps lower right there, creating, like you mentioned as well, usual context again to continue lower off that. That could be very interesting. Yes. And the reason I did not initially want to trade is because we've overall reached those targets right there. And from those lows, those are also huge lows again, where we can just expect a rejection like this. But if we then require or we demand more confirmation of this, and we can create unusual context right there from the 4-hour continuing lower, 4-hour value gaps lower as well, that could be very interesting to just continue lower. Yes, for sure. For sure. Yeah, 8 crap. Yeah, 8 cap is 8 cap is, in my experience, one of the worst brokers. Let me see. I don't know if you said it would go above the swing high because I joined the stream late and I heard you saying something would close above a high, and I looked at the chart and it looked similar to the dollar. Yeah, that is, we were talking about the dollar, but it was a whole different question right there. Whole different question. And the question, actually, to go over really quick, is the question was on the monthly, just purely based on the monthly, what would be the next target, which is simply said the next premium array. So that would be the swing high right there, which currently, that's also why I went into the weekly to mark out the weekly order block, because I'm not too confident about reaching that currently, because it's quite far away. So to say we are reaching that swing high, that's a very early conclusion, if that makes sense. Got an L on New Zealand dollar JPY. I think it was low probability because DOL was reached. Let me see. New Zealand dollar JPY. We have reached it. Well, yeah. It's yeah, that's exactly what I wanted to go over. I got distracted a little bit. This is a very important situation right here, because we have reached a drawn liquidity. That does not necessarily make it low probability in the first place. The thing that makes it low probability is when we start to respect that drawn liquidity right there. And the sign of respect is when we do not create a fair value gap exactly overlapping with the high. And that is just a very odd situation that I just do not like. I do not like that right there. So I would already demand more off of this fair value gap continuing higher. Where eventually, of course, we can work with these highs overlapping right there. We can mark out all these overlapping defenses. But the thing is, when we mark out all those overlapping defenses, then it's also like, all right, well, where are we actually going to continue higher from? Because we have this high right there. Then we have the mitigation block sitting right there. Then we have the order block sitting right there. Then we can keep on marking them. But the easiest thing to do right there is wait for more confirmation. Because the more confirmation will happen regardless. And we don't need to worry about where it's going to continue higher off of. So that would be my thought process again right there. Where that's the reason why I personally did not take the trade. Because I did not like that. If that makes sense. All good, CS. All good, all good. Let me see. Now we gotta wait again on the dollar. Trading. A lot of waiting. A lot of waiting. A lot of waiting. I'm new here, but Ars mentorship is the game changer. Study. I think the new spring will be a revolution, I think. Love to hear that, my friend. Love to hear that. For sure, spring enrollment will be very nice. It will be a different type of enrollment as well. So it will be a complete new experience for anyone here and for me as well. What do you mean with more confirmation? We have overlapping defense gap. Yeah, so more confirmation in the form of, for example, usually I require a 4-hour value gap higher, continuing higher again. And off that 4-hour value gap higher right there, a 5-minute ST plus read to then continue higher off that, if that makes sense. Because here, when we are creating, or when we are having that respect of a premium array right there, then the retracement is likely going to be bigger. As in, we are likely not going to sting into a daily value gap to then continue higher off that, which if you're trading a 15-minute ST plus read, then that would be the ideal thing. For example, this one right here. This would be ideal because that is exactly where you get just your 15-minute ST plus read very fast and then continue lower. No worries, no worries. Love to hear it, love to hear it. Unless it closes comfortably above the weekly order block low, maybe we see higher prices. Let's see. It's still tricky right here, and I would still want to wait. Of course, well, there's nothing else really to do, but this is the same scenario where For example, we now come off of this weekly order block right there, and very similar to New Zealand dollar JPY, very similar to any situation where if we now come off this weekly order block right there and we only have wicks like this, we do not have a close inside of it, we do not have any close to it, we wick it. So we reject it on the lower time frame, meaning that on candle signs basis, we are simply respecting it. Then once we come into the fair value gap right there with the fair value area, it's again where we are now rejecting alpha premium rate and we are expecting the discount rate to suddenly magically hold right there all of a sudden perfect. And that is quite unlogical because there's a lot of momentum then coming into those areas where if there's too much momentum, we will of course continue lower right there and we will see lower prices. But in the meantime, if we do want to continue higher, I would want a little bit more confirmation right there to actually say and confidently say, all right, we do actually want to continue higher. If that makes sense. Let's see. For me so far in 2024, trading is like waiting a lot until high probability trade ID presents itself, taking loss, realizing it is not high probability, waiting again. That's very funny to me. That's the experience of or that's the learning process of trading. Exactly, it's the learning process of trading where it's it's usually like that, and it was also like that. It's like for me, it was also like that for me because there's no real other way to learn like that, and you need to experience that market condition, which is very great, and then eventually just realizing, all right, this was not the best trade I could have taken. So the solution is being more patient. Yeah. But to be honest, 2024 has been quite more difficult for a filtering process as well. I believe that 100%. Sucks that dollar already hit the order block low. That would have been nice context target for tomorrow. Yes, exactly. If it didn't hit that low right there, that would have been very nice context right there to actually target that order block. For sure. Question about the spring enrollment. If I sign up for the masterclass last week for 3 months, I am in the spring enrollment, correct? Until I renew for another 3 months. Yeah, for sure. 100%. 100%. Yeah, learn. Need your input for the loss I take to learn from them. Yeah, I can understand that. And I think with all the things here, all the things in the mentorship, I think eventually you can also get to a great understanding of what makes the high probability and low probability. I think I just can see it a little bit faster, if that makes sense. But I think you yourself can already get to it really well as well. Let me see. How many trades per month you have average? It really depends on the month itself. It really depends, to be honest, because there's no one set thing that I can say, all right, I always have this amount of trades. Because for example, February so far there just hasn't really been opportunity, and that was the same for January. And then in January I took 4 trades, but it was 2 trades, and it was constantly a 2 trade on the same ID. So you could say 4 trades in total, but I see that as 2 trades actually, because it was 2 trade IDs. But that is not average, because there's also months where I take a lot more trades when we just have very nice conditions. And it also depends on, and that's a filtering process trading plan, right? Because that's for my personal preference, I like that one the most currently. But if I'm currently looking at futures as well, where it's a completely different story, where the amount of trades may stack up to, I don't know, 5 trades a day, if that makes sense. So it really depends. Do you take the ideal risk percentage, or you risk more, like more than 1%? Really depends as well on what I am doing with where I'm at on my account. For example, usually, general rule of thumb, yes, 1%. But if I am in drawdown, it automatically goes down 0.5%. Ideally, depends if I'm a heavy drawdown, so below 4%, then 0.25%. If I am in huge profit and I want to compound that on a private account, whatever it may be, then it could be 2% even. So it really depends on the overall situation. What's the likelihood of you using equity clock in which kind of situations? Equity clock is I believe I've used equity clock in the past, and if I remember correctly, it's seasonal tendencies, right? And the likelihood is close to zero unless I'm explaining it to someone again. But the reason I do not use it anymore is I don't know. For me, seasonal tendencies, it's very random. As in, the way I learned it, seasonal tendencies, is you look at the seasonal tendencies, and then they would still tell you, all right, but this only plays out if the price action aligns. Okay, so you're telling me that this only plays out if the price action aligns. Well, why am I then looking at the seasonal tendencies in the first place? Because then the seasonal tendencies will just play out with the price action if the price action aligns. So I will already see by the price itself what will happen. So it doesn't make a lot of sense to me. That's the reason why I do not use it anymore. So tomorrow, Bitcoin might give us a good long opportunity if the daily verwijgap in the making does not close today overlap with the highs. Let me see. Yes, exactly. And I imagine how far is the target right there? Right there. The only thing is, and now we also have a weekly verwijgap. So that's a little bit tricky again. But yes, that will be very nice actually. If it's exactly overlapping, that's a great sign. It's not exactly overlapping. For being extremely picky again, then it's not the ideal scenario, but this is a high probability. Yes, I do quite like that right there. To then continue higher off that towards the weekly target sitting right there. Yes, for sure. For sure, for sure. Masterclass makes learning P&L go up. I hope so. I certainly hope so. Let me see. Duo interesting if we create a 4-hour verwijgap lower. Yes, for sure, for sure. 100% agree. 100% agree right there if we do create a 4-hour verwijgap lower. But I am going to counter you right there as well. Where if the dollar right here rejects still off that weekly order block, then GU, being it's as strong as it is right there, is not that interesting, if that makes sense. And the reason for that is because then the rejection right there might be too strong, and where GU is quite strong, we might see a huge rejection like this, where it seems like we're just back into that consolidation range, if that makes sense. Makes sense, Ario. I have no expectation at the moment, although it is frustrating to take losses. Just trying to focus on the process, which is important for me. Yeah, and I would say if the losses, what if, and this is completely just my suggestion, and it might not be a personal preference for you, but I feel like you can trade. As in, from what I'm seeing and the questions I'm seeing, I feel like you can trade. I feel like the losses you are taking are very pity losses almost, are almost very, like you mentioned, annoying losses, which are sometimes just unavoidable. But I think if truly the losses get to you right there, wouldn't it be an idea to focus more on the majors and create a hybrid model where you focus on flow and filtering process a little bit in between, 50-50, trying to avoid the crosses, because those crosses right there, they take you out before they move higher, etc. Might be an idea, but again, that would almost need to turn the training plan around 50%, not, well, 180 degrees, not fully, but again, we'd have to think about that. Last question for me today, Aro. Is there any news concerning your prop firm? Last question. No worries if it isn't the last question. No worries at all. But not really. And I do quite like that there is no news as well. We're working behind the scenes. So we're working to get everything set up. So is there no news? Yes, there's news. But is it super relevant news right here? Not really. But we're working to set everything up. Also, of course, we're keeping an eye on everything that's happening, which is very important for US customers, etc. like that. And seeing what is happening with MetaTrader 4 and MetaTrader 5. We did already see that coming a little bit because we had some talks with Purple Trading, for example, and they already mentioned something like that. So it's great that they mentioned that, and great that we are not launching tomorrow, for example, because we can sit out the mess right here and then we can see whatever happens and we can go from there. So yeah, nothing major news. Still working. So GU is in the 15-minute verwijgap. Let me see really quick. I'm already on GU. 15 minutes verwijgap. All right. Yeah, if the momentum continues, then definitely right there, definitely. Only thing that I do not like is that, again, the stop loss placement becomes quite difficult right there. If it creates 1 minute, could be a nice scalp opportunity. If it creates a 1 minute ST right there, could be very nice scalp opportunity for sure. I agree with that. US dollar CHF 2 for long if we get a value gap higher with target weekly for value gap. Let me see US dollar CHF. Yeah, for sure. For sure. And this can look to continue higher as well. Yes, for sure. For sure. Definitely. A very nice and obvious target right there in the form of that daily for value gap. That could be quite nice. For sure. I'm hunting for a quick Australian dollar CHF long from the 4-hour overlapping defense. Let me see. Australian dollar CHF. Let me see. All right. First sign right there. That daily sweep of that high is not that great, in my opinion. That is something to be aware of right there. Where again leads me back to the same story. Again, I don't want to talk you out of the trade, right? That's not my intention at all. And if someone is taking a trade, then please feel free to take a trade, right? I'm not the one to tell you if the trade will play out or not play out. I can't see into the future. I can only tell you my experience. But right there, the thing I don't like is we have reached that target right there and we have a huge wicks on the top right there, meaning that that is a sign of respect of this premium raise. So that leads me to the same story again, where I would need a little bit more confirmation here to be confident about that trade, but could definitely play out 100%. 100%. Let me see actually what happened right there. What time is that? 5. Okay. 5. Okay. All right. Let me see. Do you have a video on how to use seasonal tendency? I want to use it as a last consequence. If not, can I suggest one? Well, I don't use it and I am not going to use it. So the thing is right there, because I also get a lot of questions on SMT. I can make videos on every concept in the world, but if I don't use it, then I think that tells you enough that you need to know. That I would advise to also not use it. There's a reason I don't use it. I think that reason can't be ignored in that sense. Let me see. It's a useless confluence in my opinion. They only work if the price action agrees upon the seasonal tendency, and if the price action already agrees, then you don't need them. Yeah, exactly. That's what I want to use it for. Well, if that's what you want to use them for, then you don't need them. I don't think... If that's what you want to use them for, then there's no need for them. Then you don't need to use them. But again, feel free to use them if you do want to. But yeah. And also, if they were absolutely needed to be profitable, or you would have included them. He includes only the absolute essentials. So I would say drop the seasonals. Yeah, I think, to be honest, I think if you're here to learn from me, and if I say seasonal tendencies are not relevant, then I say that for a reason. And again, I don't want to sound as the one who knows it all, but I've been there before you, and I've gone through the exact same process where I used all the macros, where I used every single concept in the world. And this led me to this understanding. And you might not agree with the understanding. That's completely fine. But then I don't really see the point why you're in the mentorship. Just don't like the respect of the premium rate with the long wick. What's your take on that? Yeah, exactly my thoughts as well, Lutfisk. Exactly my thoughts. Might halve. That's also a good approach, Derek. That's actually a really good approach as well. Might halve the risk because of that. That's a really good approach. So right here, where I ask for extra confirmation, the same trade can still be taken with half risk for sure. I like that as well. Hybrid sounds like a good idea. However, do you plan to make some video about it in the coming road? Yes, for sure. 100%. Although there's lots of material already, but some additional insights when we combine the two, maybe. Yes, 100%. And it's also not really something I have gone over just yet. So I agree with that as well. That there needs to be a specific video for hybrid model, for sure. Exactly. Yes, for sure. Just let me trade what are literally filtering process plan for prop firm trades. It's really revolutionary. Mm-hmm. Yeah, there's a lot of going on in the prop firm space. A lot. We're full time, so I would really love to just take 20 trades in a year with a very high win rate. That would be enough for me. Yeah, that's a very ideal scenario as well, and I like that idea as well. To be honest, for me, I like. I don't know. For me, the quantity is not that important. It's more about the quality of the trades right there. So that's also why I'm extremely picky about my trades, which eventually leads up to 20 trade IDs or 20 trades throughout a potential year, if that makes sense. I've already tried to add other concepts to Arios, and the final conclusion is that I didn't need them, but feel free to try. It's and I like that you did that, by the way, because I feel like I can tell you endlessly that you don't need them, but you don't really see it until you try it, I feel like. And so again, feel free to try, but eventually I think you'll come to the same realization as me. And that's essentially why you even, to be completely honest, it's essentially why you paid now, right? To have a shortcut. So to go through the same process and then also paying, that's a bit of a waste of your money, in my opinion. Let me see. Australian on the siege, Evans, A cap, there's no flag up. Actually, that's why you asked it, Derek. That's interesting. I like that. Gold might have a nice low resistance run if it can create a lower fair value gap below this current candle's low. Look at 1 hour's perspective. Yeah, I like that one as well. Actually, right here, because the only thing stopping it is those lows. If of course it can wait for those lows to take out right there before we actually create a 1 hour fair value gap, might just take off. But that's very nice actually. Another 20 points or so lower on ES, and the monthly value gap in the making is avoided as well. Let me see. Aha, that is true. That is true right there. That's very interesting. Then this becomes again a typical run or sweep of liquidity right there. Very interesting as well. Very interesting. Another run on liquidity anymore. A huge sharp turn right there, and that will be very interesting to see, because I remember in the forecast we mentioned it seemed like YM and DAX right there were all ready to continue lower, but it felt like ES and Nasdaq still had an objective to complete. And the objective currently is complete because the all-time highs have been reached right there. So since we are not offering that fair value area, we don't have, or we are not respecting it right there. We are offering it, not respecting it. Then right here, I do think we can potentially look to continue lower for a while as well. Could be very interesting. Dollar, let me quickly see right here as well. Still respecting the weekly order block, still in the same price action. All right, I want to go over, last thing I want to do right here is go over a few examples of what I mean with that balance and truly training your eye to see when it is high probability to take a trade immediately, or when you would want a little bit more confirmation, or for example, like Derek also mentioned really well, is you want to decrease your risk. Let's see, on the dollar right here, for example, we have this swing high right there. And again, it's not necessarily a swing high that I want to look to trade off of. But if we also look at this fair value gap right there, then initially, of course, we are already in seeking historic conditions. So forget about that. But if we want to trade off of that, and this was just trending conditions, then what are we seeing? We have a respect of this premium array right there. And then we expect this discount rate to all of a sudden hold. Well, that can happen. Don't get me wrong. We can expect that discount rate to hold. But the thing is, we are likely going to have a bigger retracement because there's a lot of momentum coming into that fair value gap. And that is seen through the respect of this premium rate right there. And the ideal scenario is a scenario like this, for example, where we don't have a respect of a premium rate. We have a long wick right there, but there's no premium rate to respect right there. The swing high, I wouldn't really say or necessarily say we are respecting that right there. So this is exactly when we can only expect a small sting into it to then already continue higher. And that's exactly when the ST plus re is the most effective, your usual ST plus re. Now, let's look at multiple scenarios. Let's not look at the dollar because the consolidating scenario does not help a lot. Let's see. On indices, do we have something right here? Not the nicest price action overall. Let me see. Oh, this is a good example as well right there. Not respecting a clear discount array right there. Only sting into it, then continue lower off of that. So the more we start respecting the opposite PD rate that we actually do not want to see hold, then the further the retracement likely is going to be. And the more difficult it's going to be to get an actual accurate entry, which is very important, of course. We ideally want to have the most accurate entry. I think US dollar CHF was also a really good example right here with these lows, and these lows is, again, that's a daily fair value gap that I'm marking with that line right there. Then coming into this 4-hour fair value gap is the exact same thing where there's a lot of momentum going into it. So it's not an ideal scenario. And it's the same for this right here. Right here. It's the same for this. And the most useful thing, or the most useful scenario is that you are a filtering process trader. Flow trader, all right, yes, I can understand it might be useful for your entries overall, but it's not the most relevant thing. But for a filtering process trader, you always want your entry, etc., your overall thought process, your trade ID process to be the highest probability. And this, simply said, is not the highest probability. It's different stages of probability as well. That's very important to understand. Where US dollar JPY is exact same scenario. You see the difference between these two fair value gaps right there. One fair value gap and one fair value gap right there. Now there's a small difference, and the small difference happens before it, the respect of the premium rates. Where here, this premium rate did not get respected, comfortable close above it, etc. So this is already in favor of just high prices. So when it does want to retrace, then it's going to be a smaller trade because we are so bullish that we do not have, there is nothing to support the idea that this might be a big retracement right there. So that's very important. Catch y'all later. Gotta head off. Unfortunately, have a good one. You too, my friend. You too, brother. You too. For sure. If we respect the weekly order block but create a 4-hour fair value gap higher on the dollar, you'll need more confirmation that we want to go higher, or you just need a fair value gap higher. Great question. And right here, if we do, like we're currently doing right there, respect that weekly order block, and we create a 4-hour fair value gap right there, overlapping with the fair value area, I would want a little bit more confirmation right there. Meaning, either decrease the risk to take a trade right there, or wait for either 1-hour fair value gap to continue higher right there, or another 4-hour fair value gap to then continue higher off that, if that makes sense. I'll go make some breakfast and wait to see how the 1 hour acts. Have a good day, MMT, post and profit in trades taken. Love to see it, brother. Love to see it. Thank you for being here. And I'm also going to end it here. So thank you everyone for being here. Not much price action to deal with, unfortunately. So we are going to look at Thursday again, of course, to hopefully get some more price action to deal with. Let me quickly go look at crude oil, actually. If there is any opportunities present, not really. We create the 50-minute fair value gap, failing to continue higher currently over the 5-minute fair value gap. Wow, not super interesting. All right, thank you everyone for being here. Great questions as well. I'll upload it immediately, and then I'll see everyone at the next one. Perfect. Thank you, everyone.